So we've got the market, which is, flattish, not very much going on. 2-point change now. This is actually reminiscent of what we saw for most parts of the day yesterday. Before at about 240, 245, we saw that big crack coming through. Today we had a bit more movement through the course of the day, but now it's down to being absolutely flat. Take Solutions reported numbers, and numbers actually have been disappointing. Margins are down 350 basis points on a quarter-on-quarter basis. We've got the management joining us to talk about the numbers. Srinivasan HR is Vice Chairman and Managing Director of the company. He's with us on a phone line. Hi, sir. Thanks very much for joining in. Let's start right there. What's happened on the margins? Could you explain?
No, yeah, certainly. I think first, if you look at our revenue growth year on year, it's been about 28% nearly. Margins for this quarter particularly were impacted by two events. One was we have acquired two companies in the United States, and we had announced that one is a company called Dataceutics and one is a company called KAI Research. So the expenses pertaining to that acquisition, which is a one-time expense of nearly $1.8 million came through during the quarter. The other is that the previous quarter, our numbers were stated at the dollar closing rate of 72.58. This period, the dollar closing rate was 69.57. So 3.01 rupees on the dollar is a restatement of the balance sheet which has to go through the P&L. It got no cash impact, but the accounting standards stipulate that way. So the foreign currency, obviously, it's beyond the control of the company. But the other one, which is $1.8 million, is a one-time expense, which we've taken this quarter.
Okay. Mr. Srinivasan, let's talk about the life sciences business, the internals there. How is the clinical vertical done, and how much are you looking to scale it up going ahead? How much could it contribute in FY19 or FY20 onwards?
See, today the clinical vertical, as it stands on this quarter, is about 40% of our total revenues, and for year to date, it is about 36%. We anticipate that over the next 2 years, the clinical vertical will move into the 60s. It will be about 60-65% of our total revenues. And the balance will be contributed by the regulatory and the pharmacovigilance business.
And is this a high margin business? What are the margins like on the clinical side?
See, the margins in the clinical are at about 18%, the average. The margins on the regulatory and safety are higher. But the clinical is the bulkier of the business, and you tend to get long tenure contracts. Okay. And the regulatory business and the safety business arises out of the clinical business. So the clinical business is really the big piece in the front end. And the spend on pharma R&D also in the clinical is the largest.
Okay, so that's where the focus or the growth will come from in the future. Finally, any outlook guidance for FY20?
FY20, I think our organic revenue growth should be in the 16-17%, and along with the two acquisitions that we've completed, we should be nearly at about 28 or 29% growth for FY20.
Mr. Srinivasan, I'm afraid we have to cut it short today because there are just too many results to tackle at the end of the earnings season, but we will have a more detailed chat later in the quarter. Thanks very much for the moment for joining in. So that's Take Solutions. A one-time expense is what has hit their operational performance this time around, but things should look. CG Power is a stock actually that has seen quite a bit of pain today, and through the morning the stock has been coming off. There were some concerns that the street had regarding the intercorporate loans and also the delay in the sale of their business in Hungary. And the management did hold a con call earlier this morning. So let's just hear out some of their clarifications.
There are reductions on two accounts. One is the physical cash received against the receivables. Yeah. And the second part is the monetization value, which is a non-cash adjustment against the receivables. So both put together, the 760 crore number shrinks to 270 crores. In Q3, we have the clear write-off. What we could see was approximately 5 million, which we have written off in Q3. So outside India, there is a possibility that there will be an additional 5 to 7 million write-off going forward. But within India, to our estimate and now we are out of the woods on that front. So inside India, in standalone India, I do not foresee any further write-off on this account.
Okay, that is CG Power in focus. The market is absolutely flat as things stand. We are wrapping out on Mid Cap Radar here from Sumaira, me, everyone on the team. Thank you for watching.